Hi, welcome to this video today, which is on the 6th of September. We're on Sunday. Just going to look at two trade setups today. They're two lesser looked at pairs, but you've probably got them on your trading platform. They're the USD against the TRY, so dollar v Turkish lira, and also USD MXN, US dollar against the Mexican peso. Now, in terms of in videos, we very often stress that the more pairs that you look at, the better. And a lot of traders just do not look at enough pairs and they ignore the minor pairs. Now, in terms of ignoring the minor pairs, I think that's a huge mistake because they can very often give you really low risk and very high profit potential. You get a lot of traders in the market who are obsessed with pips, okay, making a certain amount of pips on a trade. That is simply not important in our view. It's basically the risk you have to take against the reward, v the exposure you have in the market. The minor pairs will very often allow you to do very small trades but get a really good reward against risk because they tend to be more volatile and faster moving than the majors. So we really like the minor pairs and we like these two. Now, USD TRY, featured it numerous times in our Facebook group and on our Facebook page as being a great long trade. USD is up 20% alone this year. I think it's done about near enough 10% in the last 6 weeks. It could have 30% more on the upside. So that is a trend in motion. And one that could become a big uptrend, which hasn't yet, is USD MXN. Really like the risk to reward on it. So I'm obviously going to cover that pair as well. We're going to go and look at both pairs now. But just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can, of course, change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, just simply click on the link beneath this video. You get live access to our member center. You can also join our Facebook group and follow us on Facebook as well. Right, the pair we're going to do first is USD TRY. Right, USD TRY, and in terms of the technicals, I'll do them in a moment. Now, in terms of what we can see, it's lost 20% of its value this year. Just from here, where we broke to the upside, it's near enough 10%. Now, in terms of the Turkish lira, I think it could easily, or USD could go up to 8. That's another 8%, okay? And, we've got a currency crisis in Turkey, which I'll discuss in a moment, which means we could trade as high as 10. That's a 35% gain from where we are now. And I've taken the target from previous currency crises, which are as bad as Turkey's, like the Argentinian one and a few others. Okay, so it's a kind of figure I've put in. Okay, and it could be hit the 10 level. We shall see. But if we look at the fundamentals and sentiment behind the chart, there's no currency that we track. We track near enough every tradable currency that has got worse fundamentals than Turkey. So let's just go through these points very quickly before we do the technical levels. Now, in terms of inflation, CPI, that now stands at 11.77%. Now, a lot of central banks have been trying to get their inflation up, like the ECB to 2%, for example. Turkey has the opposite problem. Its inflation is high. They've got an interest rate of 8.25%, which is not containing inflation. Now, in terms of interest rates, they really need to go up to stabilize the lira. But President Erdogan, who meddles in economic policy, which he shouldn't really, is reluctant to do so, he says that high interest rates cause high inflation. Well, that makes no economic sense at all, does it? Because you normally raise interest rates to contain inflation. But he's a bit of a wild card. He's got some strange ideas, okay? And he doesn't inspire confidence in foreign investors. Now, the central bank has depleted its reserves to defend the currency. So as the USD goes up, they lack the power to basically intervene and push the USD back down. They just run down their reserves so much. Now, the Turkish economy is fragile anyway. It can't afford a big rescue package, let's say like the EU or Eurozone or the UK or the US. It runs a current account deficit, okay? it relies on foreign capital coming in to the country. Now, debts are really high in Turkey, and of course, as the USD pushes up on the lira, those debts become more expensive. So you got possibility of defaults, okay, from borrowers, and also you've got a sort of reluctance to put money into Turkey at the moment because of what's going on, and President Erdogan, the way he deals with things. So foreign investors are nervous now. They are trying to agree capital swap lines, okay, to get more money into Turkey. Only Qatar has agreed so far. China's not really shown any interest. They were approached. The UK was approached. A few others. The Fed, who have granted swap lines to many emerging market economies, will not do so to Turkey. Now, in terms of no money to defend the currency, speculators are very well aware of this, and that's why you see the USD come up, okay? And it could go a lot further. Another brewing problem is a potential escalation of tensions with Greece, okay? So you had a big move up in terms of the technicals, and you get the retracement. And when it got into this really narrow trading range down here, we became very interested in it for a breakout to the upside, which you get on that blue candle there I'm highlighting. We do come back to the green line, the 20-day moving average, and then we push above it. Okay, and once you get a strong trend, we're looking for the 20-day moving average to hold pullbacks, and you get a red come into it there. Big blue pushes off, up, a little bit of sideways or choppy action, back to the 20 and push off. Okay, so in terms of this pair, if you wanted to beat it, how would you play it? You only need a small position, okay, because you can see the percentages we're looking for. So it could be a small position, low risk, and you've got really good reward potential due to the potential volatility we could see in this pair going forward. We've already seen decent volatility. So let me just draw in some technicals. Okay, so there's a trajectory, push off, come back to the 20, and now pushing up away from it. We have a blue candle on Friday, but finished off the high. You've got decent support there. And then you've got support at the 20-day moving average. At present, our stop is here. However, if we push up blue to a new multi-year high, I would bring the stop up to here. Okay, you can see why I've done that. You've got body, 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 tail. Body comes through there, pushes off, tail comes back, and now we're sitting a little bit higher. If you wanted to come into it, where would you buy it? Buy a new multi-year high. That's a simple way of doing it in our view, or watch, see if it comes back to the 20-day moving average and key off the level. We could come back to it, just key off the level on strength. It's a simple trade setup, okay? And a lot of people will say, a bit reluctant to buy the USD because it's had such a good rise. Well, it could rise a lot more, okay? We've done well out of this pair with just a very small position. Okay, now we're going to go and look at USD MXN. Right, on the USD MXN, obviously in terms of the dollar, it's moved nicely up on the lira, but dollar's been under a little bit of pressure against the MXN. It's coming into a major support level here, though. Now I'm looking for a snapback to the upside in the USD, and to my target, it's a 14% rise, no leverage, okay, against what is a small risk. And the reason I think the dollar is going to rise, I'll just go through the fundamentals of sentiment before we draw our levels. Now, the bank interest rate in Mexico is 4.5%. The market sees no more cuts coming. You can see that from the bond markets. And that's its only supporting factor, that's got a decent interest rate. Obviously, we're in a low yield world, so to speak, with interest rates. So MXN, attractive interest rate against the USD. Now, in terms of why we think interest rates will be cut going forward, the economy is obviously in recession. It was before the pandemic. Last GDP, minus 17% contraction. All nations have big contractions, but that's a severe one for Mexico against other nations. And you ought to keep in mind it's an export-led nation. It's not going to recover quickly. Also, the coronavirus is really having an impact in Mexico. You've got 53,000 deaths against 500,000 cases. If we take these deaths and cases against population, the virus impact is the second worst in the world behind Brazil. Okay, so the virus is really hurting Mexico. The health service, doesn't have the resources of, let's say, the UK National Health Service or the US Health Service. So it's having problems combating the virus. The government, in terms of help to the economy, it's been limited. Okay, now if we take Mexico's president Andres Manuel Lopez Obrador's left-wing government, when they came into power, this before the pandemic, they were going to tackle poverty with state spending. They gave big promises. They didn't do much at all. And no big help for the economy now. I mean, you could argue Mexico just doesn't have the money. Okay. Now, in terms of the economy, it's in bad shape. Virus is running wild. It is very exposed to global trade. It's got a lot of debt. Okay, so it's not looking good for Mexico. So I think interest rates are going to come down. But you are seeing now speculators are building up long positions in the peso or short positions in the USD as the smart money commercials sell the peso and buy the USD. Okay, and the commercials, I think they're buying smart money because of the factors we've just gone through. Now, if we look at just emerging markets generally, Turkish lira is one, Mexican peso, you've got the ZAR as well, ruble, etc. The selling of the USD, we've seen a broad-based sell-off in the dollar. It's been led by the G10 currencies, hasn't it? Not the emerging markets. The emerging markets have not strengthened as much against the USD as the G20 nations. Now, that is not normal in a big bearish USD market. It's normally the emerging markets that will lead the charge. They're not. And I think that shows their potential weakness. Okay. Now, in terms of levels, there is the support level. And we're literally coming in to test it on Friday. We could go through the support level. If we come through this support level, it would then become resistance. I'll probably look to go back long through it on strength. I don't know exactly what I would do just yet. But the USD could run on a little bit more to the downside, but I'd be going for the snapback. Let's say the support level holds, though. Where would we buy? 20-day moving average. We can see we've kind of been around it, haven't we? And we get above it here. We fall beneath it. Test, 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 failure, test, failure, test, failure. 20-day moving average, if we're bullish of a currency pair, we want to see it snap. So I think coming in through the 20-day moving average is a good level to come in through. I wouldn't wait for these two candles here. I go straight through the 20. Draw trajectory. So you can let the trajectory and straight line give way, or the horizontal line, and then see if she runs. So volatility is relatively low. You can see it from these outer Bollinger Bands, pretty close. Comes through the level, we look for follow through. You'd have to manage obviously the trade as it goes, but in terms of a target to get the 14%, it would be to the 24 level. So you can see it's a relatively low risk against really good reward potential. And if we did break up, we'd be looking for follow through, okay, which means the stop could be bought up. So 24, I think, could be on the cards. Of course, we could chop around a bit in the short term, maybe go a bit lower. But if we went lower, like I said, we'd look to lower our entry level. We think going forward, USD will spring on the MXN, so 24, a good level to aim for. Obviously, we manage the trade as it goes. But maybe we could see an overrun up here. Let's say we've got risk off in the markets. We've seen stock markets be a bit soft, yeah? You had another stock market, really big sell-off, then the USD obviously power higher and its safe haven status. If we got up to there, it'd be about a 20% gain. I mean, that's kind of a long shot, for want of a better phrase. This level, though, I do think is achievable. So yeah, like the look of USD MXN. I know it was weak last week, but yeah, I think a dollar rally generally is coming. Speculators 2-year net short extreme against the dollar. If we take a basket of pairs, points to a rebound in our view. Also, I do like actually the USD ZAR as well. Yeah, emerging markets. Yeah, US dollar I think is going to have a general spring against them. It's going to go up generally in my view, but emerging markets look vulnerable to me. So yeah, USD tries done well. We'll see if USD MXN does something. But yeah, small risk against what's good reward potential. Right, that's the video for today. Thanks very much for watching me as usual. Take care. Have a good day.